This is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol UPL. This first chart is a daily chart, and each candle represents 1 day of trading. There was this huge move today, up 81%. A giant bounce here after the big drop last week. You can see the candles have been dropping for 2 weeks straight. Starting here in the first week of February, and then continued all the way down, riding lower Bollinger Band support and EMA 4 at 41 resistance. EMA 4 is the key level to break. A close above EMA 4 would put EMA 8 at 65 on deck. As you can see, there hasn't been a close above EMA 4 since back here before the drop. There was a close just above that level, and then you have to go up here to the end of January when candles were forming above the middle Bollinger Band. So yeah, and EMA's 4 and 8. So this is nice dead cat bounce today. That's what we call the dead cat bounce. Is there more to it? Well, we'll have to see tomorrow if EMA 4 resistance breaks. Back here on the 17th, the same pattern formed. This is also bullish Harami. The candles fell on the following day on the 18th. The EMA 4 failed to break and the downtrend continued. So that's the same setup here. It must break EMA 4 to head higher. Giant volume spikes. Look at the huge volume. Big volume on the bounce. There's some loading here showing on this lower wick, and then that was followed by a big gap up open. So yeah, giant volume behind the move with the bounce players. MACD down here is starting to level. All right, so keep an eye out for that hooking up, and then with the big drop that sent RSI and Fasto to oversold levels. RSI is now hitting that 30 line, just about hitting 30 there. So look for a break above 30 to show the chart's heating up, and then you've got Fasto down here below 20 oversold. So yeah, both indicators have a bunch of juice to run. So really this is just a dead cat bounce until EMA 4 resistance breaks. If EMA 4 fails to break, that's going to signal more downside risk. That's the important thing on this chart. If you look at the next chart, this is the 15-minute chart. Each candle represents 15 minutes of trading on this chart. And you could see here there was this big gap up open today and above the middle Bollinger Band. And so that was signaling to you, so you combine this big volume bar into the close, the volume spike into the close with this lower wick, almost hammer. There's a little bit of an upper wick, but this is the loading off of the low with the giant volume bar. That's what we call the load. Bounce players, bottom feeders, playing for the, loading up, taking positions for the rebound, and that's exactly what happened today. The share price opened above the middle Bollinger Band, and candles continued riding EMA's 4 and 8 support the entire day. So what you're looking for here is the middle Bollinger Band at 0.323. You want to see that level hold. If that level breaks, that's going to signal downside risk. There was a close today above the intraday resistance. As you can see, the yellow line is representing the intraday resistance. There's a close above that. That signals more upside potential. And what we're looking for now is over here on the 18th. As you can see, this was support. And so what was once support becomes resistance. So now that's going to be the key level to break. So look at 40 tomorrow as the key level. Candles forming about 40. That's going to signal more upside potential. Fail to break 40 will signal downside risk. There was a volume spike into the close. MACD down here is pinched. And so keep an eye out for MACD. If you see the green line cross the red line to the downside, that's going to signal downside risk. Okay, thanks for viewing this chart. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.